As the bond market was breaking Wednesday evening, there was a lot of talk about China perhaps dumping US treasuries. As it turns out, it appears that there was a fund in Japan that was caught on the wrong side and basically went through some forced liquidations. That said, there's been a lot of chatter that what if China wanted to ratchet up the pressure on the United States and truly start dumping treasuries. Now, if you don't know what that means, you could think of China owning an asset, and they own a lot of it. And if they wanted to inflict pain, what they could do is take their asset and dump it all in the market at one time, or at least a large percentage of that. Now, in the bond market, what would happen if increased supply came in is two things. First, with more supply or significantly more supply, you would see the price of said asset go down. This is nothing more than Econ 101. The market is used to transacting at a certain level. An outside force comes in with a large and unplanned for supply. The price of said thing goes down. And then in the bond market, what happens is interest rates or the interest rate paid on those bonds go up. Now, if you play this out just one more step, because China could be selling the 10-year treasury, and you and I both know that the 10-year treasury influences mortgage rates, China could theoretically destroy the US housing market for a period of time. The challenge or problem or fact of China dumping treasuries is it is a limited time only. They have a very large supply, but it is capped. So they could theoretically, if they wanted to, dump treasuries probably for the 3, 6, maybe 9-month time frame. Again, driving down price, interest rates up. But at some point, that process would just run its course and they would be out of treasuries. I'm fighting off a sneeze. I'm sorry. But yes, that is true. There was a lot of people on Wednesday night thinking it was China. It turns out to be a firm in Japan, it appears. But yes, absolutely true that China could significantly move mortgage rates, at least for a short duration. Well, I think we've got to talk about Trump and his pivot to 90-day pause or negotiations or whatnot. I think it's going to be interesting to see how people react. Some people are saying it's nothing more than a classic art of the deal, New York real estate guy move, come out wild, crazy, make them think you're crazy with these calls, force action, and then give a little, classic art of the deal. Others are saying he's a wild, psychotic man who doesn't know what he's doing day in and day out. Frankly, I don't care which one it is. I really don't care. What we are seeing now is more clarity. So this is what I took from where we're at today on tariffs. Now, obviously, you know that this could change with one tweet or one post on Truth Social. So near as I can tell, the tariffs as they stand right now are 125% on China. So China had come out as someone who retaliated, and as a New York real estate guy would, gone back tit for tat. So the China tariff situation appears to be 125% as of this morning, and who knows if it goes higher. All tariffs on other countries, at least for the next 90 days, are held at the base rate of 10%. Now, folks, if you don't know what happened at the Rose Garden on Liberation Day, when President Trump first announced the 10% base rate, the market was actually up. It was actually less than they had feared And then, of course, they brought out this stupid chart with retaliatory tariffs, which aren't even tariffs, and all hell broke loose. But we are going back to the 10%, allowing time for Scott Bessent to come out and negotiate deals. As of this morning, it appears, again, if the Wall Street Journal is correct, there are at least 15 trade deals being actively worked on right now. Included in tariffs, we still have steel and aluminum. Those tariffs are 25%. Again, I go back to a conversation we had about a week ago, maybe 2 weeks ago, where there were 3 areas declared as national security. One was steel, one was aluminum, and the final one, pharmaceuticals or drugs. We have not seen yet that tariff. I assume it's going to be massive. I think one of the things we learned during the pandemic is the U.S. is not well positioned to protect itself should something like that happen. We frankly rely on people that don't like us. So I expect a big, nasty, and rightly so, national security tariff on pharmaceuticals that is coming. We have not seen that yet. We still have a 25% tariff on imported cars, right? Parts and whatnot from other countries. So again, that's where I have the tariffs as of right now. Again, they could change in one tweet, but that's what I see them at. Because of the Trump pivot, or whatever you want to call it, JP Morgan has pushed back the first rate cut to September from June. So again, we're seeing a lot of the people back off their recession calls and pushing back rate cuts. In fact, the market went from pricing in 5 rate cuts on Monday morning to now, or a Tuesday morning, now to only 3 rate cuts. So again, big difference. I want to shout out Jamie Dimon. Apparently, President Trump was watching an interview with Jamie Dimon, and Jamie Dimon clearly painted a picture that was worse than President Trump wanted. In fact, President Trump acknowledged, again, according to the Wall Street Journal, he understood that the tariffs could cause a recession. This is, again, President Trump talking to his inner circle, but wanted to make sure it didn't cause a depression. Yeah, that certainly was on the table if things got worse and worse and worse. But back to Jamie Dimon, he basically said, if you want to calm down markets, show progress. Let Scott Bessent take time. Trade deals are very large and very complex. Hence the 90-day pause, giving everyone time to deep breathe and hopefully create plenty of win-win transactions. One of the things that I do think is interesting, if you go back to, what would that have been, Tuesday night? These days are all blending together. Yeah, I think it was Tuesday night when the bond market was breaking, when the 10-year note popped to 4.5, the 30-year popped to 5%. I think we learned something once again. The stock market can throw its fits and starts, and it doesn't matter. Doesn't move the needle. But if you break the bond market, that will get people's attention. Again, President Trump talked about the bond market breaking Wednesday evening as a sign of concern. Don't forget, folks, if you are in my school community, you will have the opportunity to do a live Q&A with me 8 a.m. Sunday morning. I just put the Zoom link inside school this morning, so it is there for you. I hope to talk to all of you. Again, if you're not a part of school, I don't know why not. It's 67 pennies a day. We have 6 different masterminds or accountability groups. We have thousands of dollars in free education. But most of all, the best part of school is we have 350 amazing people all going the same direction, all caring, all willing to help, ask questions, help you. You should be joining school, not for the education or the accountability groups, but just to get in the right rooms, right? Get in the right virtual rooms with the right people. You will not regret it. We did get CPI today. CPI, our first of 3 inflation readings, and it was a great number. Great numbers. According to CPI, both headline and core are crashing Inflation is collapsing. If you don't know what I mean, CPI was, headline inflation was 2.8 last month, 2.8. The month-on-month reading was actually deflationary, folks. We got a negative 0.1. So headline came in at 2.4. That is a massive drop for a single month. In fact, CPI headline is, getting closer and closer to 2%, right? The 2% target we hear so much about. And then, in fact, core went from over 3 to 2.8. This is the first time core inflation was below 3% since March of 2021. Think about that. Core inflation is below 3% for the first time since March of 2021. It'll be interesting to see what the Fed does with this. We have a lot of Fed presidents talking today. We will obviously speak on that tomorrow, or what is today, Thursday, so on Sunday. Some of the numbers inside CPI or inflation. Oil again has been dropping. Oil was down 6.3%. Again, as you watch oil prices drop, that is very helpful for inflation. Airline tickets were actually down 5.3%. So again, we are seeing deflation in some segments of the economy. And then shelter, the big bugaboo, still 30 some odd percent of CPI, was up 4%. It is slowly working its way lower. I do not think there's any chance that shelter inflation is truly 4%. But given the ass backwards way of they do the calculations, it is still showing this number. So again, you do have the lowest shelter reading in quite a while. Talking about inflation, you actually had China. China's inflation reading is deflation. China's inflation reading was negative 0.1%. Again, China's economy is in tatters and will only get worse. If you don't know, well, I'm sure you do if you're on this channel, China is an export-based economy. Also, they're an economy that broke the housing market. They have lost faith of their consumers, their citizens. So what they are struggling through is an export economy that is clearly deflating, and you have consumers that are conserving cash. This is not good for the economy. China has and undoubtedly will have to do more to stimulate their consumers. China desperately needs their consumers to go shopping. And given my experience and my times in China, they are nervous and they are going to conserve cash like never before. So it will be interesting. We did get another earnings announcement. It really starts en masse tomorrow on Friday. But Constellation Brands beat top line, beat bottom line, but as expected, gave a very weak forecast. I don't know if you know who they are, but Modelo beer and things of that nature. They are suffering with a 25% tariff on all canned beers. That is one thing that's out there. They also import 100% from Mexico. So again, feeling that tariff. So again, we are starting to see some winners and losers come out of this tariff regime. We did get the Fed talking. We got Fed Kashkari talking about uncertainty may lead to an economic decline. Again, folks, I'm really starting to think about consumers, enterprise, aka businesses, both small and large. And yes, maybe the rules look a little bit better today. But if you are out there making decisions, do you truly feel better? In fact, our nerves just all over the place. Yesterday, the stock market ripped and had record ups. I haven't checked this morning, but the futures were down. So I don't know what's going on right now. But there's a lot of people that are on, their nerves are frayed. And that's generally not a good time for consumption. Fed President Hammack talks about prefer to wait and see versus moving in the wrong direction. Again, as I've tried to highlight, the May meeting is probably a nothing burger. It's the June meeting. The June meeting is going to be dicey, I think. We could have a weakening employment base. We could have low GDP, and we could see rising inflation. But again, we shall see. Weekly unemployment came out this morning. It was, again, we're bouncing around that low level of 220. It came in at 223, came in as expected, so right on the number. Jeremy Siegel is out there talking some more, talks about stocks not being out of the woods yet, as we still have difficult negotiations with China ahead. CarMax did release earnings this morning. They beat on revenue, but they missed on earnings. Again, revenue means they sold a lot of cars. Earnings meaning they didn't make enough money. They also announced $575 million in capital deployments. They look to open 6 new stores and build more reconditioning and auction centers. A couple more things we'll wrap up. Mark Zandi, odds of a recession still 60%, even after the Trump pivot. Prada is buying Versace. For any of you that like Italian fashion, you are about to have one monster out there called Prada. Again, Prada buying Versace for $1.375 billion. Quite the purchase. And then finally, shout out Frank for the accountability group. They talked about Section 8, short-term rentals, professional pictures, and so much more. It went for 3.5 hours. Folks, again, if you have any interest in real estate investing, if you want to get started, you need to join the group today. If you're a real estate agent, real estate broker, join the groups today. We are out there. We are all moving the same direction. We know how to do the work, get buy boxes, write disrespectful offers. I do not know why you are not part of this amazing community at 67 cents a day. I hope you have an amazing day. Take care of yourself. We will do this again live at 7:30 on Sunday. And if you want to have a little sneak, we will be doing the weekly wrap-up with Ty tomorrow at 7:30. That will also be live. Take care, everyone. Have a wonderful day. Bye.